Hey everyone, it's the Geeks from the Geeks of Finance. We're looking at our zero DTE gamma exposure flow feature that we just added on our dashboard. This is basically helping us to identify what strike prices have the largest gamma exposure concentration on an intraday basis. And this helps us track it throughout the day. We're already tracking zero DTE gamma exposure in real time every 60 seconds, but we want to chart that through the day to see how the flow of gamma exposure progresses as the day goes on. And we've noticed a number of interesting points since we've added the feature, and we want to share that with you guys in this video.
Yeah, Anthony, one thing I'll say about the GEX flow tool is that in the past we had a view of the gamma as it existed at that moment. And I would always be trying to think of, well, where was it before? Like, are we seeing a positive or negative shift? So,
Yeah, if we just look at the SPX and how it's been trading, the 54.35 strike has been the focus this morning from a gamma exposure perspective. And the reason that's important is because this is a level where option dealers are going to be focused. They're going to be increasing their hedging activity as price moves into that level. Currently, we are trading at 54.17. So that'd be about a 20-point move if we were to get up to that level. And so a lot of times what happens is that those strike prices may get tagged in the middle of the day, or they may pin there by the end of the day. And so we really pay attention to these outlier moves. One of the other characteristics that we look for is the acceleration in gamma exposure. When we see the gamma exposure levels at a particular strike really accelerating relative to the rest of the strikes, like if you look down here, not much really happening with these two strikes down here. This is the 54.15 and the 54.10. Those are pretty much flat. So it's kind of signaling that we may be at a bottom here intraday. And simultaneously, we're seeing this 54.35, which is this kind of orangish line here. 54.35 has been accelerating higher, meaning the gamma exposure is increasing at that strike. So this is important information to know and to track because we can really identify what strike prices the rest of the market is focused on.
in this case, like that really catches my attention that this 54.35 is ramping up the way it is. And the current price, SPX is around 54.17 or so, 54.16. If that proves to be correct, there is a pretty good gap there of almost 20 points to capture if this thing actually starts to move toward that target. What would you make of that? Or is the market saying there's still a pretty good shot at 54.35, but maybe getting to 54.50 is a long shot?
Yeah, exactly. The 54.50 just is declining in gamma exposure. The strike that's been trending the highest has been the 54.35. The rest of them are fairly flat. If you just take a look here since this morning, these are all the relevant strikes that really matter. They're the largest gamma exposure strikes intraday on a zero DTE basis. And so that's what makes this feature so valuable. You can really pinpoint which strike is likely going to matter the most to traders and to option dealers. This is actually, I don't know if you remember this, Sean, this is a screenshot from Tuesday from our Discord. We were identifying the SPY 536 and 537 strikes. We pointed an acceleration in those two strikes. At the time, the SPY was trading around 534.50. This was around 10:30, 10:45 a.m. on Tuesday. So if we just come over here to the 10:30 candle, these are 30-minute candles. So you can see the open of that candle was 53.72. So we were trading right around 534 on the SPY that morning. Meanwhile, this 536 and 537 strikes were accelerating. So that was a big signal to us that these could be potential targets for the day. And if we just come back to the chart, we can see that that is, in fact, where price ended up. It took most of the day to get there, but the closing candle on June 11th was 536. No, the high was 537.01. So, I mean, right there on that last candle, we went from 536 to 537, exactly as our zero DTE GEX flow indicated. And so this is the power of analyzing GEX flow on a zero DTE basis. We're basically just taking the option contracts that expire that day and looking to see where the gamma exposure is going to be the most critical and at what strike price. We could also track this for weekly expirations. Most of the mega cap stocks in the market have weekly expirations. So if you think about NVIDIA, which had that big stock split earlier this week, I mean, look at the ramp on NVIDIA. That's crazy, from 95 to 130 on a split adjusted basis just in the past 2 weeks. If we come down here to our GEX flow, these are weekly contracts, so we still track the weekly flow on a day-to-day basis. It matters more, of course, as you approach expiration, which is going to be on that Friday's contract expiration. Today is actually Friday that we're recording this, and so the weekly GEX flow here becomes 0 DTE because it expires today. So looking at the total gamma picture for the last week, the 130 strike has been the main focus for NVIDIA. And obviously that played out perfectly here, ramping right into that level. So that was a really nice way to play that. And then just coming down here to the weekly GEX flow, what do we see? 130 stands out, right? All the rest of the strikes here are basically flatlining. And the 130 strike, since the open this morning, has been the focus. So, there's a number of different strategies you can employ to take advantage of this data. You could do 0 DTE butterflies, to take advantage of that theta decay. If you see higher strikes starting to accelerate, you can buy out of the money calls for a quick scalp. There's a lot of different ways to play this. And a lot of our members in our Discord community are using this really successfully on stocks like NVIDIA, Netflix, SMCI, the SPY.
Yeah, I noticed earlier we reached 132 or maybe 133, but the 130 strike remained in focus from a gamma perspective, and sure enough, we faded back down toward that mark.
Yeah, that's exactly right. We treat these more as zones, right? So that you can see this, we've kind of highlighted here, this red zone. If we back out, you'll see this is our dealer cluster. This is the area on, for example, on NVIDIA, where option dealers are going to be the most active. And this is a classic gamma exposure reaction, right? So what happens here is the price trades right into this gamma exposure zone. These are where option dealers in a positive gamma environment will have to start selling the underlying security in order to hedge their option positions. If we just back out here and take a look, there's not a lot of gamma exposure up here above the 130 level, right? It's very small. Same thing below 130, very small relative to that 130 strike. All of the concentration is here in the 130, and a lot of this, of course, is going to expire today in this weekly expiration. But this is classic gamma exposure behavior in a positive gamma exposure environment. Price trades above the main gamma exposure concentration like we see here. Option dealers are then forced, in order to hedge their positions, they're forced to sell shares of NVIDIA to hedge their option contracts that they're holding in their portfolio. And what does that do? That forces the price back in to that main gamma exposure concentration. That's why if you watch a lot of our videos, we focus on these concentration levels, because that is where dealers have to hedge to, especially the higher the exposure, to make sure they are in line with that strike. That's often the case that we see happening, is that dealers are hedging, forcing price into that main concentration level. Let's take a look at the Qs. 0 DTE, you can see there's a big concentration up here at the 480. Qs are currently trading at 477. But if you look at the 0 DTE GEX flow, this green line is the 480 strike, right? So if we just look here, the 480 has got 45 million gamma exposure. The next largest absolute gamma exposure is the 474 with negative 40 million. So 480 edging out in size on an absolute basis. This is the one I would be paying attention to from a probabilistic standpoint. The 480 line here, if we start seeing this accelerate into the end of the day above all the rest of the strikes, that could indicate an increased probability for a move into that 480 strike. So that's what we'll be watching the rest of the afternoon. We're talking about this constantly in our Discord, so you guys definitely should come in, check that out. We've got a lot of very knowledgeable, well-rounded traders with a lot of experience. So come on in, say hi. Guys, if you're interested in using these type of tools related to gamma exposure and option flow data, check out our website, geeksoffinance.com. We've got a couple of different memberships as well. If you're unfamiliar with gamma exposure, you can check out our playlist here on YouTube. Also, our members have access to our Geek University. This is a 5-hour option strategy course, which is focused on gamma exposure. So we give an introduction to option strategy, portfolio management, volatility, gamma exposure, and our overall trading strategy, how we approach the market. You get access to our gamma exposure dashboard, education course. There's a lot of great content in there. Definitely check that out when you get a chance. Anyways, thanks so much, everybody, for watching. We'll see you guys in the next video.